Hey guys, what's going on? Hope everybody's doing well today, guys. In this video, you're in for a treat today because I'm going to show you exactly how to identify liquidity and where price could actually reverse from, which makes you a genius in trading. So with that being said, let's go ahead and jump right in here, guys. And with further ado, guys, if you guys enjoy this video, like and subscribe means a lot to me and mean the world to me. And if you could also go ahead in the Discord, I invite you to my private Discord server, and if you have any questions, you could always let me know. Could always be there to help. So with that being said, go ahead and join the Discord down below. All right, so basically, if we look at a chart here to identify liquidity, guys, as you can see in the market, say if we, what the heck just happened there? What in the world? Okay, we'll just say there's highs and lows, right? In the markets, there's going to be highs and lows. And basically where price is likely to go to, right, these relative equal highs and lows. And mainly liquidity could just be any type of high and low, but if they're relatively more equal here, that's the best way to do it. So say if we have a high in the markets here, we got a low, we got another high, a low, high, low, high, low, high, low. You get the point. Let's just say price is right here. All right, as you can see, if we identify where is our liquidity, well, we got a low, we got a low, and a low. These are all relatively equal, right? So if we mark this out here, this right here would be a nice liquidity point. So meaning that in the markets, right, there's, of course, there's buyers and sellers. A lot of people, okay, let's put it this way first. The markets like to punish people. This is where stop losses are. Okay, so the people that are going in long here, right, say if they're going in long here, they're going to have their stops at this obvious level of lows. So price again likes to actually come down first and take those people out, which make them get stopped out, right, before actually continuing to the upside. Does that make sense? So basically that's what liquidity is, and what it means is that we have an obvious level where people put their stop losses at, right, which price actually comes down and takes those orders out, which stops those people out, then actually continues higher here, right? Then it continues higher. Okay, let's just say we have, look at, we have a low, we have a high, low, high, two equal highs up here, okay, two equal lows down here. All right, so let's just say, right, we're going to identify liquidity. So where is our liquidity? Well, liquidity rests at highs and lows. So we're going to go ahead and identify, are there relative equal highs and lows here? Well, we have these two highs that are relatively equal. This is a good liquidity point to mark out. So if we go ahead and mark this out here, this is a good liquidity point to mark out. So this would actually be called our buy side liquidity, because why? Because it's at this high, right? If price comes up, takes this out, takes those orders out here, basically what we're looking for is a reversal, because we stop those people out, and then we're likely to continue lower to other equal lows and highs. So basically these two equal lows here are actually sell side liquidity, because it's sell side. We have our sell side, which is our lows, and our buy side, which is our highs. Price comes up, takes those people out, then reverses, takes these people out. Get it? So a lot of people actually do take an entry, right? The smart money people out there wait for this liquidity sweep, wait for these orders to get filled and stopped out, which then they go ahead and target other liquidity. It's basically what liquidity is in a nutshell. So let's go ahead and go to the charts here, guys. A 30-minute chart, as you can see, what we're basically going to look at is exactly how we did it with the drawing tool, right? We're actually just going to be doing it with candlesticks. So we're going to go ahead, and I want you to identify first the liquidity, right, of this chart. So we're going to start with buy side liquidity. What is buy side? Well, it's going to be our liquidity highs. If we look here, we have this high and this high here. Can't you see the relative equal? Basically, we're going to go ahead and mark this out as what? Buy side liquidity. So this is our buy side liquidity here. We're going to expect that price will want to reach up here later on this area and take these people out. Where did price sweep? It looks like we have a kind of jagged area here, right? This is where people have their orders at. Yes, this is a liquidity, but again, we want to identify the most highest probability liquidity is in relative equal highs. So if we go ahead and see where is relative equal highs, do we have some back here? Look at right here, we have this low here. These are pretty much relatively equal, right? Which is our sell side liquidity. And as you can see, price did actually end up taking these people out here on this. It takes these people out, right? Then it reverses. So it's kind of like our mindset when it comes to the markets. I want you to look at markets this way. I want you to look at markets how there's relative equal highs and lows above where price is actually attracted to. All right. So that's considered liquidity. Buy side, sell side. Sell side gets swept first. What is the target now? Well, our buy side, right? And as you can see, price comes up, sweeps the buy side perfectly here. You see that wick? Perfectly sweeps that. Okay, comes back down, right, to take out what? Where does price come back down? Well, it's in this fair value gap, but we're identifying liquidity here today. Well, we have this low, we have this low. These are pretty even here. So this is another liquidity point here, right? Price again sweeps that, sell side liquidity. That's how we want to look at markets and how they're actually attracted to highs and lows in the markets. Although it's not perfect, this is exactly what the markets are attracted to. What price is attracted to? Liquidity, right? All right, you guys, so really quick on the 1 hour time frame, highs and lows on the 1 hour time frame are the amazing key levels where price could reverse from. As you can see, we have this high here, this relative equal highs. Okay, these are two relative equal highs on the 1 hour time frame. This is our weekly high. So price actually sweeps it on the lower time frame here, as you can see. Price then reverses, right? Which instantly, this is a good entry here. People put their stop losses above at this high after the liquidity sweep, targeting other lows, and boom, there it is. So stops at the other high that we just swept previously, right, on the 1 hour highs. Price swept it, came down. Now we have our stops there. This is a safe high here where we could put our stops after a liquidity sweep. Price comes down. Now we target relative equal lows. But with that being said, guys, hope you guys did enjoy this video. Hit the like button, hit that subscribe because I'm here. Again, guys, hit that link down below for the Discord down below and join the community. With that being said, peace out, guys.